Hi, I'm with Massie and Associates Financial Planning. My name is Charles Massie. I'm a CFP and a CPA, and I'm talking about tax-advantaged asset protection. Being a CPA, I worry about tax. Being a CFP, I worry about protection. So some of the things that are relevant to that is reducing current taxable income, reducing future taxable income. That's the tax-advantaged portion. The asset protection portion is protecting your current assets from creditors, protecting from litigation, protecting from future creditors, and protecting from creditors from those that you love. That's one of the biggest things. There's many different ways to do that. There's various entities which I would typically refer you to your CPA to deal with, things such as LLCs, S corporations, C corporations, etc. What I'm going to most talk more about would be the things such as Homestead. When you buy a house, you want to be sure to do Homestead, and in Florida you have until March to get that done if you buy a house. That gives you creditor proofing here in Florida. Different states have different rules in reference to Homestead. Florida, it's a total situation, and it also gives you an exemption. Life insurance, one of my favorite vehicles, because it too is creditor proof, and it's also tax advantaged in that you pay no tax upon your death. It can also be utilized to pay no tax for retirement purposes. In regards to growth, that would also be tax-free to you in the form of the life insurance. It has low interest if you want to borrow from the cash value that builds up, and in some cases no interest, depending upon the product. Then there's annuities, one of my other favorite. I know that drives some people crazy because they're used to this old concept of annuities. I think of it more as a self-funded pension, and in the case of where you take your own money that you have currently saved up, put into the annuity, and then it starts to pay you out for life at some future date, or maybe after you initially put the money in. One of the concerns people have from the old days of annuities is that once you do that, and if you die the next day, that you lose the money. That's not the way annuities work anymore. They're nothing like that. They will continue to pay you out for your life, and then when you die, the cash that's still available in the annuity will go to your family. Then there's irrevocable trusts. In the case of people in this day and time that have significant funds, because the estate tax is around $24 million for a couple, or $12 million individually, it's not quite as big a situation as it used to be when it was down to $675,000 for an estate. But there is the potential for it to drop, and my guess is somewhere around $3.5 million per person when Congress finally gets around to it. That's what they really seem to want. They've been wanting that though for years. Don't know when that'll happen. But these are just some of the methods that you can utilize to protect your assets. My suggestion is give us a call at 239-333-2526, and we can schedule an appointment to get into far more detail on any one of these type options. I'm as I said, CPA and a CFP. I've had many businesses. I started actually as a pharmacist. I've had yacht dealerships, national software companies, so I'm really an entrepreneur and can help you accordingly. Thank you.